It is up 166 points, up 0.5%. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash Call.
All right, John Tucker, thank you so much. We appreciate that. Tale of two tapes, the Dow up 167, NASDAQ, thanks to our good tech friends reporting some disappointing numbers last night, off 1.2%. Let's check in with Vince Signorello. He does this trading stuff for a living. He is global macro strategist for Bloomberg News. And Vince, you talk to traders here, which I know you do all the time. Are you getting the sense that we're laying in potentially the ground for kind of a bottom here in the market, or are we too early for that?
I think that we've actually been seeing this for a couple of weeks with traders essentially basically feeling that we've hit that peak hawkishness phase of markets. Data has been not too rosy. Home sales yesterday were pretty terrible. Yep. Not as bad as expected today, as John mentioned, but still down 10%. And now the big driver today is the Bank of Canada raising by only 50 basis points instead of 75.
See, Katie called that out. The big driver. Thank you, Vince.
Thank you, Vince.
Absolutely. It's totally what's moving the markets today. And the reason why is one of the statements in the NPR monetary policy report for the bank saying that inflation was easy, but also sales were declining, and they noted exports to the U.S. And Canada exports 70% of their product to the U.S. So if their sales are slowing to the U.S., guess what? Growth is slowing in the U.S., and the knock-on effect is potentially the Fed doesn't have to be as aggressive at their next meeting, and certainly not in December, as people are pricing in.
Well, Vince, that's what I was wondering as soon as I saw that headline. Not that Canada isn't super important, but I'm sitting here in New York City. I know I have a Fed meeting next week to cover. How much weight should we put on the idea that the Bank of Canada is going to lead the Fed here and maybe taking some steam out of this hawkish tilt they've been on?
I'm not so sure they're going to lead the Fed per se, but I think that basically what people are feeling is that they're seeing the same thing. And that if the Bank of Canada is seeing it, certainly the Fed should be seeing it. And I've been saying this as Paul knows for like months, that they've been too aggressive. And we're looking at the situation now where particularly housing, and the Canadian market is very sensitive to what the bank does in housing because they don't really have fixed rates when the Bank of Canada moves, the mortgage rate moves. So it's like a really quick response versus how it happens here as it works for the banking system. But I think it takes, while it takes time to work for the banking system, we're certainly starting to see it with mortgage rates where they are. And I think markets are starting to feel good about the fact that maybe the Fed just slows down a little bit.
Vince, I wonder if we've seen peak dollar. I'm looking at the Bloomberg Dollar Index off a little bit today. I'm looking at the 1-year chart up on my Bloomberg terminal here. Have we seen peak dollar?
It's very, very possible. And if we've seen peak hawkishness, we've seen peak dollar. There's been a really tight correlation since March between the S&P 500 and the Bloomberg Dollar Index. And as the S&P has been dropping, the dollar's gone good, and it's pretty much sort of that risk-off phenomenon going into dollars as a protection, if you will. Now, as we're seeing yields come off, we're seeing stocks backing up again. There's a real possibility if that correlation holds, and I don't think it even really has to hold that tightly, but I think we definitely have seen the peak in the dollar. We'll see stocks. Hopefully the Fed will pause, follow the Bank of Canada. We'll see stocks higher going into the fourth quarter and into next year. That will see yields come off, bonds will rally as well, and the dollar won't be as attractive as it has been.
Canada speaks. The world listens.
Definitely. It's hockey season. Why not?
Vince, I do want to get your thought on a different take on the very tired narrative of bad news is good news. We talk about that in the context of economic data all the time, but sifting through the earnings reports that we got this week, Microsoft yesterday as well as Alphabet, obviously the stocks aren't reacting too well today, but Microsoft specifically calling out the effects of that dollar, it almost feels like, not that the Fed is targeting corporate earnings necessarily, but it feels like we're starting to see the effect of tightening financial conditions show up in some of the earnings report. I'm wondering if you're seeing the same thing.
Yeah, and the reason for that, and I can tell you this from firsthand experience having marketed the major corporations, there was a time that we were in a dollar downturn, and so as the dollar turned higher, they were loath to hedge those positions, thinking that the dollar rally was going to peter out, and you have corporate treasurers and CFOs always having this feeling that we're going to pay the top, and if we hedge here, we're going to get in trouble, and so they don't hedge at all, feeling that they can rely on history, and the dollar's just not going to follow through. Well, for the last pretty much 3-4 years it has, and that's really been the corporate earnings. Now, it hasn't hurt as much in prior years because we were having strong sales, strong growth. When you get into this almost recessionary feel to markets, and then you get the knock-on effect of a higher dollar dinging your earnings, that's really what hurts the large caps, especially as you saw Microsoft, I think, is the bellwether for that. I think, though, going forward, if that situation reverses, and it has that feel to it, the lower dollar will then start to benefit those large cap companies, and I think we'll see a reversal of that, and it will help earnings. So going forward, I think it's positive.
Okay, good stuff. As always, Vince Signorella, global macro strategist for Bloomberg News, giving us his thoughts. We always love talking to Vince because he's a former trader on the street. He speaks to these folks out there on the various trading desks out there. He gets a real-time feel for kind of where the sentiment is out there just on a day-to-day, intraday basis, too. So it's good checking in with Vince. We'll have more coming up. This is Bloomberg.
And we're brought to you by Interactive Brokers. IBKR Event Trader offers a new way to trade futures. Use event contracts to trade your opinion on yes or no questions in key CME futures markets. Learn more at interactivebrokers.com.
IBKR Event Trader offers a new way to trade futures. Use event contracts to trade your opinion on yes or no questions in key CME futures markets, including equity indexes, energy, metals, and foreign currencies. For example, will the price of gold close above $2,000 today? Yes or no? Take a position daily on potential price movements and gain exposure while limiting risk. Learn more at eventtrader.interactivebrokers.com.
I'm Matt Baxter with your Bloomberg Technology Brief. Rent prices in most major U.S. cities have skyrocketed to over $3,000 a month. But one company is looking to ease renters by helping them earn points on their rent and build a path towards home ownership. For more on this, Bloomberg's Caroline Hyde spoke with Ankur Jog, founder and CEO of Built Rewards.
So you're seeing this massive uptake from a generation saying, hold on a second, rent is my biggest expense. Yeah. You can give me value there. I'll be loyal to you across all of my other spend categories. And by the way, if you can help me build a path to home ownership. And so we went out and we actually partnered with Fannie Mae, Freddie Mac, and FHA and built the first tool where you can actually see, based on your credit profile, your income, real-time interest rates, say, here are the homes that you could buy for the same monthly payment as your rent.
That was Ankur Jog, founder and CEO of Built Rewards. You can catch the show weeknights at 7 p.m. on Bloomberg 960 and 103.7 FM HD2. I'm Ed Baxter, and this is Bloomberg.
Smart businesses are always looking for ways to improve. Better work days can start with Cintas. Your dedicated Cintas service reps help make sure you have what you need when you need it. We'll stock your essential cleaning products, deliver hygienically clean workwear, inspect your fire extinguishers, and provide first aid and safety supplies. Cintas is with you every step of the way, so you stay a step ahead. Visit Cintas.com.
Oh, I'm ready!
And get ready for the workday.
Why do alternative investment managers rely on Pershing for personalized prime services? Lisa Lewin, a director of BNY Mellon's Pershing Prime Brokerage sales team, shares how we help you consider everything.
As the alternatives industry continues to evolve, Pershing wants to know, are you getting the service and support you need to overcome today's obstacles and challenges? Are you confident in the stability of your counterparty? Do you need help expanding your investor network? Do you have the latest allocator insights on investment strategies? Whether you're looking for customized financing, securities lending solutions, or capital introductions, Pershing is an award-winning prime broker committed to providing exceptional service and dedicated to meeting your needs, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers. Visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
Hey, good morning. I'm John Tucker. Bay Area Business Time is 7:29. Time for the Bay Area's best traffic and weather. We do it every 15 minutes. So let's get the update on the